Now, when it comes to estimating expenses and when it comes to estimating income, I am not advising you one way or another about how to handle this. This is an article from a company called the Pappas Group. They have a lot of good content online. This one particular article is something you may want to check out if you're not familiar with this. The Cohan Rule is a Supreme Court decision that actually came about, I believe, in the 1920s, stating that there is a place for estimating income and expenses for self-employed people. Okay, so because somebody's estimating their expenses does not necessarily mean, right, that you can't use any of that, or you can't do that person's tax return, or they're a liar, they're a cheater, right? People know, everybody knows, and the IRS knows that this is a real life situation. A lot of these people are new business owners, right? And they just need to file a tax return. So being able to understand that court case, right? Especially if you do, tax problem resolution, like Sean just mentioned in the chat box there. A lot of returns, right? Like you could get involved in a tax resolution case where you're sitting down with an auditor, and the person knows that the expenses are not from a QuickBooks, right? They're not from they're not like quote unquote real, right? However, if that money was actually spent, right, and it's a valid consideration for what that amount was, and there's consideration of how that's connected and ordinary and necessary to their business purpose, right? I'm just saying there is a place for looking at that, and it's a big part of the picture for this client group.